Savings accounts are trash. So what we're going to do today is look at a much higher yielding alternative so that your money doesn't just sit around and rot away to inflation. What's up, guys? Welcome back to Everyday Money. Now, if you guys have been around here for any length of time, you've heard me go on about savings accounts and how it is a terrible idea to save your money in a savings account. And I think a lot of it goes back to when people were told to save their money. And I think what a lot of folks really meant by that was not spend it so that you would have it later on in your life. But a lot of people take it to be as save your money. And what they don't do is they don't end up investing it into anything for it to grow. Because if you put your money into a savings account, it will sit there and it will accrue very little interest. As a matter of fact, most savings accounts out there are not going to keep up just with the rate of inflation in the United States, the officially stated rate of inflation. Even the very high yielding online savings accounts will not keep up with the normal rate of inflation. And as we all know, the real rate of inflation out there is much higher than what the official government numbers are. I mean, if you guys have filled up your gas tank or purchased food at the supermarket lately, you know that the prices of things are going up far faster than the average, 3 to 3.5%, and your savings account isn't being able to keep up with that. Now, a lot of folks do like savings accounts because it comes with that nice, warm feeling with that FDIC insurance up to $250,000. But the reality is you are insuring your money to go down in purchasing power over time. It's like taking a dump in a box and putting a guarantee on it.
Hey, if you want me to take a dump in a box and mark it guaranteed, I will. I got spare time.
And so for that reason, I really only use savings accounts for two very specific things. The first one is a very short-term emergency fund. That would be things like stuff that you can't put on a credit card for a very short period of time and able to get money out of other investments and pay off those credit cards. Things such as like mortgage payments is one of the only things that I can think of that comes to mind that's in my life that would be difficult to pay with a credit card, because then I would have to take a cash advance against it and pay fees and penalties for that. And it's just not that great of a deal. But if you have a couple $1,000s sitting around in your savings account that you can use to pay your mortgage if something happens to you for 3 to 6 months, I think that that is a good use for a savings account. Another good use for a savings account is if you have something that you are going to purchase that you need a specific dollar amount for, such as like if you're going to put a down payment on a home or a car and you know that you need XYZ amount of dollars to make that happen. You wouldn't want that to be tied up in some sort of investment and have some sort of thing happen, like a Black Monday type of deal, and right before you need that money, it goes down in value tremendously. I had something like this just recently. We are putting in an in-ground swimming pool, and we had gotten the money for that last year for the installation for it this year. And what I did not want to happen, even though it pained me to see tens of thousands of dollars sitting in a savings account, essentially losing money as the stock market continued to go up over the course of holding that. But I needed that amount of money for sure because we had a contract price for that, and I didn't want to have to end up short on that money and have to pull that from other investments. So those are the two good reasons that I think that savings accounts can be used for. But let's look at what I like to do with my saved money so that I can make sure that it's working for me constantly and make sure that it is producing income that I can invest in other assets. So what I like to do with my money that I save, and I really just invest it, is that I put it into low-cost index funds, and the ones that I like the most are the U.S. total market index funds. These are the ones that track the entire U.S. stock market, and for me, the United States is always going to be a very bullish thing for me. I think that they are always going to go up over time, no matter what the geopolitical thing is going on right now, no matter what wars or whatever are out there. Historically, the United States has always gone up in value in the stock market, not just because I'm from the United States, but I believe that with our diverse population, the amount of capital available, the amount of financing available, the manufacturing base, the intelligence that people can get and the education that people can get here, I just always will believe that the United States will always be bullish. So what I like, my favorite index fund is the VTSAX. Total Market Index Fund, and also VTI, which is the ETF equivalent. Now that does offer some other benefits versus VTSAX because VTI you can trade it more often than you can with VTSAX, and it trades more like a stock. So if you're familiar with buying stocks where you can buy and sell it at any time versus only one time during the day, for VTSAX, you know, you may be more comfortable with that. But the point is that these low-cost index funds, and there are tons of them available from Fidelity, from Charles Schwab, from anyone. As long as they have a low fee and they're a total U.S. market index fund, I love it, because what you're going to be getting is, on average, a 10% return annually. And lately, it has been quite a bit higher than that. It's been in the low teens of returns. And you know, during this recovery, I think we had one year was like 51 or 61%, where it had really skyrocketed from the lows of the previous year. But you can count on that 10% average rate of return, which should outpace the rate of inflation. And to look at a practical example of this, what I want to do is I want to show you guys my VTSAX account in my Vanguard account, and I want to show you guys where I would be had I have just put my money into a savings account versus putting it into this Vanguard investment account that I essentially use like a savings account. Now, when we're looking at this, this is not a tax-deferred account. This is not a Roth IRA. This is not a, it's not an individual traditional IRA. And there are a lot of advantages to both of those. But what I like to be able to do is have all of my money available to me at all times, including the returns, because I use that money to invest in other investments such as real estate, where I can make even higher returns than I get in the stock market. So let's start this video recording here and look at what I have. What you'll see on the screen right now is that I have total purchases of $46,296 and investment returns of $34,696. And that looks like that's almost a 100% investment return. It would be about like 75% or so. But what I have done is, over the last 2 years, I've invested in this account, and for the most part I haven't sold. But about a month ago or so, I took $15,000 of this out in order to buy another Gatlinburg investment property, a short-term rental, because of the insane yields that we are getting down there. So let's look at what I started with. I started with about $35,100 invested on in March of 2019. And as you kind of march this chart out, you can see where my purchases have gone up. You can see where my market gains or losses are, because there were some times where we were into the negative when this coronavirus thing really kicked in. I went down by about $10,000 and had, you know, real losses, not just my returns being lost, but actually losses from the amount that I put in. But as always, it's always come back. And as we go down this line here, you can see that at towards the end here, I have 59,000. Let's go one more month. 60,208. $60,996 invested, and off of that I have made investment returns of $30,769 over the course of about 2 years and a couple months. And then you can see right there that I sold that $15,000 in order to get some of the down payment money for the next cabin that we are going to purchase. So my purchases and withdrawals total is now down to $46,296.39. But we still have the investment returns over the cumulative over time of $32,337. And at the final end of the chart here, we have total purchases in the sum of purchases and withdrawals of $46,296.39, and total investment returns of $49,696.02. So I have from the total purchases and the total returns, we have ended up with, you know, $34,500 of returns based on just holding my money in this account and just continuing to purchase into it. Now, if we go back to the highest amount that I had in there before I sold that $15,000, is $60,996. Had I have just simply stuck that into a savings account at this point in time in this chart, in this video, I would have only had $60,996.39 in actual money. However, since I started putting that in back in March of 2019, I would have been losing money, or in losing purchasing power with the money, I should say, every day, every minute since I put that money in. And if you just look at inflation from a 3% annually type of deal, without getting into, diminishing returns of, the 3% from the 3% before would be less, but if we just say we would lose 6% over those 2 years, my purchasing power of that almost $61,000 would be reduced to about $56,400. And so we would have, in a savings account with that nice fuzzy FDIC guarantee, we would have guaranteed ourselves a loss of about $5,000 on a conservative basis. Now, over those 2 years, I would say that the real rate of inflation is probably at least 5%, so we're probably looking at almost a $6,000 loss of buying power if we would have simply had this in a savings account. So that is why I think that it is much wiser over the long term if you have your savings, your long-term savings, your big amount of money that you're sticking away to either use for retirement or to use to purchase something else, such as, like I said, a vacation home, a rental property, something else that's going to make you some money. You would be better off sticking it into one of these low-cost index funds. The downside is that there is some risk with this. Stocks do go down. We have all seen the stock market go down. We saw the crash in 2007 to 2009. A lot of us probably remember the dot-com bubble crash, the coronavirus crash, and then all the crashes in history like Black Monday, the Great Depression, etc. The thing is that if you have a long-term enough look on this, you will know that it always goes back over time. If anyone could go back right now and purchase at the peak of 2007 or the peak at the Great Depression, if they could take money now, go back and buy it then, and just fast forward to today, every single person would do that, and that is what you can do right now, even if we were at the tip of a crash. If you bought that in 5 years or so, you would probably be completely made whole. But there is some risk if you need this money right now in the next 1 or 2 years. If you can look at your amount here and say, I can lose 50% of that and still be okay, I think that this is a solid thing for you to do instead of getting that guaranteed loss in that savings account. Again, guys, I am not your financial advisor, so if this is something that you don't understand or that you feel very risky about, go ahead and speak with your financial advisor. This is just what I'm doing, and this has worked out great for me so far, because what I've been able to do is we bought our first Gatlinburg cabin that's over $500,000, 100% with returns out of our real estate investments that we had purchased and sold over the last 8 years. Now with this next one, we had to kick in a little bit of our own money. Me and my business partner, we put in $15,000 each. And when you look at this Vanguard investment account, you can see that I took that $15,000 essentially completely out of investment returns that I have made on this versus money that I had just sitting in savings. So at the end of this chart, we have the ending balance is $80,992.41, and that is minus the $15,000 that has already been accounted for out of to put down on this investment home that is not only going to make us money, but it's also going to appreciate in value. It's going to create us a lot of tax incentives, and it is going to be paid down over time by guests staying there. We still have this amount in there versus at most the $61-ish thousand that would have only been worth about $56,400 in buying power. So guys, if you like this video, be sure to give it a big thumbs up for me. That really helps me out in the YouTube algorithm. Be sure to leave me a comment down below with either questions, or if you think that I'm an idiot for doing it this way and you think that it's way too risky, or if this is something that you're considering pursuing, leave me a comment down there. Be sure to also subscribe if you haven't yet, to grow your wealth, increase your success, put you on the road to financial freedom. We talk about all things money here, including investing in the stock market, investing in real estate, investing in cryptocurrencies, and just growing streams of passive income so that you can reach your financial freedom and stop trading all of your time for money. I appreciate you guys watching today, and I'll see you in the next one.